You know what's worse than not having money in the bank? Having money in the bank and not knowing if you can spend it. Most contractors I talk to have this exact problem. They've got 50 grand sitting in their operating account, but they can't tell you how much of it belongs to the hospital project, how much covers next week's payroll, how much they can actually take home without kneecapping a job or missing rent on the shop. That's not cash flow management, folks. That's financial Russian roulette. Today we're fixing that. I'm Wade Carpenter, CPA for contractors, and I'm going to show you how to separate JobEx from OpEx using Profit First for commercial construction so you always know what's yours to spend and what belongs to your projects. Here's a construction trap that catches everybody. You mix job cash and overhead cash in one big pile, and then you wonder why a project runs short or overhead spirals out of control. Walk into any contractor's office and ask them how much of that bank balance is actually yours. You'll get a deer in the headlights stare because they have no idea. The original Profit First framework makes a good start. It nets materials and subs against revenue to find real revenue, but it stops there. It doesn't actually separate the cash flow into distinct accounts. So when overhead runs short, and it always does, you unconsciously reach into job cash to cover it. You're starving your projects to feed your office, and you don't even know you're doing it. It's like having one checking account for your business, your personal life, your kids' college fund, and your vacation savings. When the electric bill comes due, which pot are you going to raid? Whichever has the money in it. And good luck remembering to pay it back. PFCC fixes this with structural separation. Dedicated bank accounts for JobEx and OpEx that prevent commingling and reveal true margin behavior in real time. Think of it as building a firewall between your production cash and your operating cash. The original Profit First framework was built for service businesses, consultants, coaches, software folks. That's fine for them, but it treats construction like every other business. And that's like using a butter knife to frame a house. The tool ain't wrong, but it sure ain't built for the job. PFCC takes that framework and gives it some common sense. Instead of treating construction like a lemonade stand, it recognizes that job cash and overhead cash have different purposes and different rules. Original Profit First says you define your real revenue as revenue minus materials and subs, then pay most everything from OpEx. PFCC says, hold on there, partner. Let's create a JobEx account that handles all the cash that walks out the door only because a job exists. And let's tighten that OpEx to reflect what it actually costs to run the business in real cash terms, not accounting fiction. Here's where PFCC gets clever. It expands what counts as job costs beyond just materials and subs. Permits, bonds, job-specific equipment, rentals, variable field labor, anything that would leave your company without a specific job. The framework also formalizes residual revenue. That's revenue minus JobEx minus OpEx as the pool that funds profit, owner draws, and tax reserves. This isn't accounting gymnastics. This is keeping your eye on what's actually yours to keep. And here's the kicker. PFCC's OpEx is cash adjusted. It removes the funny money stuff like depreciation and adds back real cash obligations like debt principal payments. Your OpEx budget finally matches what actually leaves your bank account. Here's the rule that makes this whole system work. Pay from JobEx only if the cash would not be spent without a specific job. Think of it like this. If that job didn't exist, would you still write that check? If the answer is no, it's JobEx. If yes, it's OpEx. Let's walk through some examples. Materials and subcontractors, obviously JobEx. No job, no concrete order. Permits and bonds, JobEx. The city doesn't care about your overhead. They want your permit fee for that office project. And it comes out of the office project's money. Equipment rentals, here's where it gets interesting. That 3-week crane rental for the downtown project, JobEx. But that 5-year skid steer note you're paying every month, whether you have work or not, that's OpEx. The principal payment is a cash obligation that runs the business. Variable field labor, if you bring on a framing crew only when jobs are booked and send them home when work slows down, Their payroll and their job tied benefits belong in JobEx. But if you keep a core crew on salary year round, whether you have work or not, that's OpEx. Field supervision, a superintendent glued to one project for 6 months, allocate his salary proportionally to JobEx. A super who floats between three jobs, that's overhead OpEx. Let me give you a back of the napkin example that makes this crystal clear. You got a $200,000 commercial remodel. Here's what you're paying this month. Drywall sub, $18,000. Material from supplier, $12,000. Permit fees, $2,500. 3-week scissor lift rental, $1,800. Variable framing crew, 2 guys, 3 weeks, $9,000. All of that, $43,300, comes out of JobEx. It's job tied cash. Now, same month, here's what you're paying to run the business. Office manager salary, $4,500. Shop rent, $3,200. Liability insurance, $2,800. Equipment note, $4,000. Multi-job superintendent, $6,000. All of that, $20,500, comes out of OpEx. It's overhead that persists whether that remodel exists or not. You bring in a $50,000 progress payment. Before you pay anything, even Friday payroll, you allocate 60% to JobEx, that's $30,000, 25% to OpEx, that's $12,500, 15% to profit owners comp and tax, $7,500. Now you pay the JobEx bills from JobEx and the OpEx bills from OpEx. You're short on OpEx this week. That's okay. You can see it and plan for it. What you can't do is raid JobEx to cover the shortfall. The structure won't let you. Here's where most contractors get tripped up. Your P&L shows expenses that aren't cash, and it hides cash that isn't expenses. Depreciation on the excavator? Not cash. It's an accounting concept that helps with taxes, but it doesn't leave your bank account. Principal payment on that excavator note? Real cash. Leaves your account every month like clockwork, but your P&L doesn't show it as an expense. PFCC's cash adjusted OpEx formula fixes this. OpEx equals your P&L operating expenses minus depreciation, minus owner draws, minus taxes, plus your debt principal payments. Now your OpEx budget matches what actually walked out the door. No funny money, no surprises. And that's why this system works, because it's built on cash reality, not accounting theory. One more thing before we wrap. PFCC adds a CapEx reserve to protect you from equipment crises. Most contractors learn about equipment cash flow the hard way, when a critical piece of machinery breaks down and they don't have reserves to fix it quickly. This account is funded essentially from OpEx, never JobEx, so you build reserves before you need them. When your skid steer needs a $15,000 engine rebuild, you draw from CapEx, not from cash that was supposed to finish Project D or pay your office staff. The decision rule is simple. Short-term rentals go to JobEx. Financed equipment and major repairs are planned through OpEx and CapEx. Without a CapEx reserve, reactive equipment purchases are like surprise dinner guests when you only got leftovers in the fridge. Someone's going to get hungry. Look, your cash flow should be as clear as a good set of blueprints. PFCC's JobEx and OpEx separation gives you that clarity by creating structural barriers that prevent commingling and reveal true project performance in real time. The discipline is simple, but the results are transformational. You finally know what each job actually costs and what your overhead actually burns. If you want to dive deeper into this, grab the book Profit First for Commercial Construction on Amazon. It walks you through the entire system, step by step, how to set up your accounts, how to run allocations first, how to adjust your target allocations as you grow. And if you want hands-on help implementing this in your business, head over to profitfirstconstruction.com and schedule a call with our team. We specialize in helping contractors get control of their cash so they can stop wondering where the money went and start building wealth. You can't build a house on a crooked foundation, and you can't run a construction business on mixed up cash. PFCC's JobEx and OpEx separation gives you the structural clarity to see what's really happening with your money and the discipline to keep job cash where it belongs. That's it for today. I'm Wade Carpenter, and I'll see you in the next one.